Earlier this week, we unpacked consumer sentiment numbers, and one overarching theme was that consumers were less optimistic about their own personal finances than the broader economic recovery picture. So, to take a look at the state of personal finance to a degree, Paul Slot of Octogen and Luke Hirst, MD of Debt Busters, join me now. Paul, of course, joining me at the desk, and Luke joining us live from our studios in Cape Town. Paul, I'm going to start off with you because I mentioned that highlighted in that consumer sentiment survey was the theme that we look at consumers viewing their personal finance in a very different way at this stage of the game to what they're seeing in terms of the broader economic picture. Do we look at this as consumers still under significant pressure, or just becoming a lot more conservative because of the harsh lessons they've learned?
I think it's both. We have about 18 million consumers who make use of credit at this point in time, and about 8 million of those are in trouble. As they're 3 months and more in arrears with their payment. And that's a significant amount. What we are seeing now is that consumers are spending less, but we're also seeing an increase in sort of social spending over this period. And one wonders if they're using money that should have gone to debt repayments and actually spending it on social spending and getting further into trouble. So we still got a long way to go to actually get out of that hole, especially the 8 million consumers that are already in trouble.
Yeah. Well, Luke, just looking at that, I mean, Paul highlighting a very important point in terms of, what could be providing the support of those positive retail sales numbers that we've seen today, that money could be being directed in the wrong way at this stage. Looking at the position the consumer is regarding debt, are we managing to see progress in terms of consumers digging themselves out of the trenches, so to speak?
We are certainly seeing some progress, but as Paul says, looking at the stats, there's still more and more people falling further into arrears. Looking at the retail figures and what the gentleman was saying, it's certainly positive to see those retail figures have increased, but I would like to see the figures coming out in the next couple of months of how much of that has been borrowed, because what we don't want to be seeing is more consumers just taking out further debt because of this good feeling from the World Cup and finding themselves with a huge hangover later on.
Well, Paul, after the recent interviews we've had on the show in terms of debt counselling, we know that debt counselling is becoming more sought after, illustrating to a degree that consumers are becoming more cognizant of their situations and really asking for help. So what's your sense of consumers' ability to actually manage their wealth thereafter and their own finances and budgets?
I think it's a question of can we get into the process early enough. There's about 180,000 consumers who've applied for debt counselling successful, and close to 200 million has been paid over to the credit provider at this point in time, illustrating that the process is working. But what we are seeing is that those consumers who have applied probably wait a little bit too long. Instead of actually sorting out the problem now, they actually tend to move more and more into short-term debt. And if that is not successful anymore, then they apply. So we need to move that time frame out to say, if you sort it out, if you apply earlier, you can actually resolve the issue much easier.
Well, Luke, it's not just applications for debt counselling that seems to be on the uptick. We know that credit volumes are increasing as well. According to the National Credit Regulator, new credit saw an increase of 18% for the quarter ended December 2009 compared to the quarter ended September last year. So with this and the NCR being fully enforced, I mean, what's your sense of the effectiveness of the National Credit Act right now?
It's very effective. It's a fantastic piece of legislation, and it's certainly helped a large number of people in South Africa. Looking at those credit figures you were saying, again, it was mortgages which had shown the least increase, and then the short-term credit which is showing the most. People are going out and they are still spending too much because they're not budgeting on a household basis. That means that they are going further into arrears, and things like debt review, which were introduced from the National Credit Act, are an absolute lifesaver for many of these over-indebted consumers.
Well, Paul, what's interesting with the fact that people are applying for credit, it's that it's increasing, and it contrasts quite starkly with some of that data we received on Monday, where consumers show that they're not as confident about their own personal finance as opposed to the broader economy. To what extent are people simply just trying their luck in terms of applying for credit?
Well, if you actually look at the numbers, there's about over the last quarter, just on 10 million people who applied for credit, only 60% has been successful. So there's a high ratio of people who still want to actually go into the credit market, and because of the history, they actually cannot make it happen. The question is, what do they want to do with those funds? Are they borrowing money to repay existing loans, or are they actually going out and spending or investing in a holiday or whatever the case may be? That we don't know at this point in time, and that's the key to saying, are we improving or not?
Well, that's certainly seeming to be a recurrent theme that we need to start seeing data emerge on that front. With interest rates, Luke, being lowered, consumers, do you see consumers being prone to sticking to the habits of tightening their purse strings developed over a bad period, or going more in towards spending on discretionary items?
Well, the interest rate, obviously interest rates have come down 5.5% over the last 18 months, and what we should have seen is an increase in the amount of debt getting repaid. But we're not seeing that fast enough. So what is very worrying is that if there's the upward tick in interest rates, which may be around the corner, certainly happening in places like Australia, then the over-indebted consumer in South Africa is going to have more and more of a problem.
Yep, and just to end off, Paul, I mean, what's your outlook in terms of the debt picture moving forward and the savings ability of the average South African consumer? Because we know that this is something that we haven't gotten right over the past. The savings culture in South Africa is still very underdeveloped.
People are saving less than 1% of the income, but I think what we are seeing is that people are becoming more and more aware of the situation, and they say, what can I do to resolve this? They're approaching their credit providers. They're starting to actually say, but I need to change my spending patterns to actually repay more debt. We're starting to see it. I think we need to see it implemented a little bit more.
On that note, let's leave it there, gentlemen. Thank you so much for joining us. Of course, Paul Slot of Octogen joining me here at the desk.